Hi guys, a very good afternoon and welcome to the Mumbai News Center. I'm Pavitra Parekh. You're tuned into your stocks and we have a lot of queries to get to, but a quick look at the markets before that. We're actually trimming the losses, so it's just around a 20-point cut that you're seeing on the Nifty right now. So we are attempting a move higher. We're back above the 17,700 mark. So let's see how the rest of the trading session pans out. The banks are where you're seeing a lot of the recovery playouts. That's pretty much at the flat line right now, and that's been a significant recovery that we've seen. There you have it on your screen. So we'll talk about that in a bit. And all through the day, it has really been the mid-cap index which has really been holding up. So let's see how the rest of the trading session pans out. It is the penultimate day before the expiry that we will have on Thursday. So let's invite our guests on the show. We have Sharad Avasthi, who's head of PCG Research at SMIFS, and Kush Bohra, who's founder at kushbohra.com, to answer all of your stock-related queries. Gentlemen, very good morning and thank you for joining us. And first off, season's greetings to both of you, and thank you for joining us right after Diwali. So, we have a lot of queries coming through, so I'm just going to dive right into it so we can take as many as possible. P. Suresh has written to us from Bengaluru. He's saying 1,800 shares of Laurus Labs. This is at 272 a piece. He also has 100 shares of TTK Prestige at 1,134 and 163 shares of Tata Steel at 114. So, you can see the kind of investments that he's made. He's given us his portfolio of these three companies. So I'm going to come to you both on this. Kush, if I can start with you first. Laurus today is down around 5% after its earnings. So of course, even aside from that, he's seen quite a loss on Laurus because I'm apologize over there. He has seen quite a gain on that stock. It's up at 455 right now. So that one has done quite well for him. But take us through your call on this entire portfolio and how would you look at it now? Also because we do have Laurus's earnings which have come through.
Sure, Pavitra. First off, thank you for having me on the show, and season's greetings to all the panelists and all your viewers. You're right on Laurus. He's sitting on a very handsome profit. The stock is in a bit of a downtrend off late, but nothing to worry about. I would say hold on, especially the fact, given the fact that his view is long term. Hold on with a tight stop loss of 400. If the stock falls to those levels or below, that's when there could be a bit of an issue. But otherwise, structurally, it does not look as bad. He could actually see levels of 500 and 550 also in the coming days, or rather in the coming months, on Laurus. As far as TTK Prestige goes, fairly similar. Hold on to this, have a tight stop loss at around 880 because that's where the support zone is. But once the stock sees through this selling pressure that it's been witnessing, it could come to about 1200 levels. He will have a chance to exit maybe at a marginal profit, but a profit nonetheless. Tata Steel, the entire metal pack has been under pressure. And we are hoping that there will be some sort of revival globally. The stocks are also showing some kind of strength, but I wouldn't take them as a trading bet just yet. Hold on with a tight stop loss of about 95. If that revival does come through, then the stock could see levels of 130. Otherwise, he may have to exit at cost.
All right, got it. Let's also bring Sharad into this conversation. Sharad, take us through how you're looking at this portfolio and specifically on Tata Steel. Like we've been talking about, the metal stocks have been under a lot of pressure. Is there something else that you prefer within the metal space?
Yeah, season's greetings to you and your team and Kush as well. So let's start with Tata Steel only. I think there are a number of problems that the company has with respect to debt and everything, and the European operations going through a bit of turbulence given the Russia-Ukraine situation. But the way the company has panned up over the last 2.5 years, and the way debt has more or less halved, I think most of the pressure is absorbed. Initially, the markets were too euphoric about the kind of growth that can come out of steel and metal stocks. But I think now the valuations are at roughly fair valuation, and I think the next 2 years we should settle around 15 rupees per share earnings kind of on Tata Steel. And I think the fair value should be somewhere around 9 times. So I think you should hold on with a target of around 135 on the stock. And the dollar index reversal, which we are expecting, should also partially help metal prices and as well as metal stocks. So I think that should be good for them. Most metal stocks are trading at attractive valuations. It's not that something is very expensive. The other two stocks, I think Laurus Labs, we have a coverage on the stock, and we think while the quarterly numbers have been a bit of a challenge, but long term we are very bullish on the stock. And what happens is that usually when you are trying to get these approvals in the European markets or somewhere out of India, the time taken to get those approvals is a bit larger than the products that they do. It's 1.5 years. So I think the China plus one strategy will play out over the next 1.5 years, where the company might gain foothold. This quarter particularly, it's raw material pressure. I think with oil and gas prices coming down, gradually the RM pressure through the chemical chain and the petchem chain should gradually come down over the next 2 to 3 quarters. So that should also help these pharma companies. So Laurus Labs, you can continue to hold with a target of around 650 to 675. TTK Prestige valuations are not very attractive as such. It is still trading at around 35x FY24 earnings. But given the dominant positioning the stock or the company has, I think 10 to 11% CAGR should happen. So FY24, we are expecting an earning of somewhere around 28. So you can hold on with a target of somewhere around 1100.
All right, so that is the call on all three of these stocks. I hope that helps our viewer, and he's got a complete assessment of what the portfolio is really looking like. But with that, let's move on to our next one. Rohini Sharma writes to us from Noida in UP. She holds 350 shares of Hindustan Zinc at 300 rupees a piece and 2,000 shares of Ashok Leyland bought at 100. So those are the kinds of investments she has. She's saying she's a medium-term investor and she wants to know what are the prospects of both of these investments. So first up, let's take a look at Ashok Leyland. That one is up on your screen. She's sitting on a good profit. The stock has done well as well. So let me come to you first on this, Sharad. How do you look at Ashok Leyland? And also a lot of these auto stocks have been doing very well. We've been talking about that. Even some of the auto ancillary companies. Do you think Ashok Leyland is a good way to play the theme?
Yeah, the theme is good, but I think the only point is that Ashok Leyland is a tad on the expensive side. We are expecting 20-25% kind of top line growth, and most of the overcapacity that the CV industry had built up post implementation of GST because the traffic smoothened. I think now over the last 2-3 years, we have gradually absorbed all that excess capacity, and now the CV cycle could be on a very strong footing, say over the next 2 to 3 years. So for Ashok Leyland, we are expecting the earnings to ramp up to EPS to ramp up to somewhere around 6.5 by FY24. So even considering that, it is trading at somewhere around 22 times. Considering this, I think a switch to Tata Motors would be better because it is the leader in the CV space and the CV cycle playing around nicely along with JLR and the passenger vehicle push. A diversified portfolio, all three segments we are expecting to do very well over the next 2 to 3 years. So I think Tata Motors is a better stock to own rather than Ashok Leyland. So I'm advising to switch from Ashok Leyland to Tata Motors for a target of around 600 to 650. The other stock she has is Hindustan Zinc. Valuations for HZL are more or less fair at 11-12 times, but the company has an aggressive plan of around 14,000 crore over the next 5 years. The dividend yields are very attractive, 7.5%. There is not much debt on the balance sheet. So I think she can even continue to hold Hindustan Zinc if the investor has a longer term horizon. 1.5 year may not be so much of a gain that can be raked in from Hindustan Zinc, but if you extend your horizon, I think it could be a very good investment.
All right, so that is on Ashok Leyland and Hindustan Zinc. Kush, let me come to you for a technical view on this. Take us through Ashok Leyland once again. The same question that I asked. Do you think this is a good way and a good stock to really get into the auto space, or is there a better one? And on Hindustan Zinc, for this year, it's down around 12%. Do you think the worst of it is done and it's likely to move up from here?
Sure, slightly different views than what Sharad mentioned, and I'm very sorry to confuse the investor here. But Ashok Leyland has actually come back to its support zone. 140, 145 was the range where the stock traded for a very long time before it gave that sharp breakout and made that up move to close to 170 levels. The stock is again back to those levels. Now, what the good thing is that this downfall has not been on the back of very strong volumes. The volumes have been pretty already almost under average. Now, this is the zone where the stock had seen a demand previously. It's it's taking some support at those levels. In fact, I would say this is probably a good time to enter Ashok Leyland. It's back to those zones. The targets of 155 and 170 will be at play again, so you can continue to hold on. In fact, even look to add some more as far as Ashok Leyland goes. As far as Hindustan Zinc goes, here the stock has been in a range. It's attempted a couple of bounces, but that's got sold into around 280, 290, the similar zone where the stock is right now. In fact, 300 is where the stock's 200-day moving average also lies. So I would say hold on to this stock for the very tight stop loss of 270. There is a chance that the stock would come to 300 levels, which is very close to her buying. In fact, that is her buying price. then she may get an opportunity to exit at cost. I don't see very big upside in the stock, at least in the near term. As far as Hindustan Zinc goes, Ashok Leyland, add more or continue to hold.
All right, got it. So that is a full fundamental as well as technical view on both of these stocks, Ashok Leyland as well as Hindustan Zinc. But with that, let's move on to our next query. This comes in from Madhumita Carlos, who writes to us from Kerala. She says she holds 50 shares of Adani Green Energy. She bought these at 2,097 a piece, and 100 shares of Tamil Nadu Petroleum, which is TNPL, bought at 70 rupees a piece. Now she wants to know whether she should book her losses or stay invested. Losses in Adani Green, because TNPL has done very well. So let me come to you, Kush, on this. TNPL has been a wild ride. I mean, it's up over 100%, right, in just this year. How do you look at it from here? Do you think there's lots more and you should just stay invested?
So first, kudos to her for investing and staying invested for such a long time. Usually, you don't get to see this, right?
Yeah.
I mean, everyone's in a hurry to book profits. So kudos to her, on that. As far as the setup goes from here, the stock is rather beautifully placed. There isn't, too much of an overbuying or overheating zone that we are seeing in this stock at the moment. It came up to 275 levels, then it's cooled off a little, and then it's again resumed its uptrend. So I would say hold on to this stock. There isn't, anything indicating that that the rally is over or there is a bit of selling pressure in this stock, coming its way. In fact, I see the stock going to 300, 325 levels in the coming months. So hold on to TNPL. As far as Adani Green goes, well, the stock has been very volatile, but now it's coming to a range. It's actually at a make or break, kind of a situation. The triangle pattern suggests that it could break either way. That's why my suggestion would be hold on to this one with a very tight stop loss of 2,000. If it does move higher, as some of the indicators are suggesting, then the stock could go to about 20 to 50 levels. But it's at a make or break kind of a situation. So 2,000 and 20 to 50 is the range that I would play for.
All right, got it. So that is the view on Adani Green as well as TNPL. With that, we have to get into our short break. But I request both of you, Kush and Sharad, to stay on because we have lots more queries coming up in just a bit. So let's take a short break and we'll be right back. Hey guys, welcome back. You're still tuned into your stocks on CNBC-TV18. The market, by the way, is really now cutting its losses. The Nifty Bank has even moved into the green right now. It's around 25 points in the green. So there's definitely some momentum that you're seeing over there. A lot of the banks which were on the weaker side, the likes of Axis, are really seeing a big spike. And that looks like it might even break into the green right now. It's just around 30 points in the red for now. And a lot of the others, the likes of SBI, have been supporting the market since the morning as well. But let's get back to all of our queries. We still have Sharad Avasthi and Kush Bohra with us, and we have a lot of queries to get to. So the next one comes in from Mahesh Ranapath, who writes to us from Hyderabad. He says he holds 154 shares of Hindalco. He bought this at 584 rupees a share, and 75 shares of TCS bought at 3,850. So he wants to know whether he should hold or book his losses. Sharad, let me come to you first on this. Both of these, nifty stocks, but we know the kind of losses that have come through in a TCS or in Hindalco. Both of them, TCS is down around 20% itself this year. So how would you look at these, and do you think like the worst for the IT space is done and you should hold on if you've held on for all this time, and we will see a move higher as well?
Yeah, I certainly believe that for IT, the worst is more or less done.
Yeah.
The way issues have cropped up over the last few quarters, and first we are talking about attrition, then we are talking about people being sacked and employment and increments not being handed over. So it's been a very confusing 2-3 quarters for the whole segment.
Yeah.
Optimism to pessimism, suddenly the switch has been very fast. So yes, gradually I believe this dust would settle, and now the uncertainty would gradually settle over the next 2 to 3 quarters, that IT is not as maybe on a nervous footing as people are anticipating it to be. So for large companies like TCS, Infosys, we are expecting top line, bottom line CAGR of around 10 to 15% over the next 1 or 2 years. For TCS, for FY24, we are expecting an earnings of somewhere around 130 rupees. So you can continue to hold on for a target of around 30 to 50. But I think Infosys seems to be better positioned considering similar earnings growth, the valuation multiple that Infosys, if it gets a similar multiple of say 25, I think that has more upside for say around 1750. So if he's willing, we can switch from TCS to Infosys. That's a better option. Hindalco, I think again, valuations are not very expensive. It is trading at somewhere around 8 times, 9 times FY24 expected earnings. Considering the company's capex plan of around 60,000 crore over the next 5 years to expand capacities, that should help. 1 or 2 years, maybe we will have muted earnings growth or flat earnings basically. But packaging and autos could lead to some re-rating as the usage increases, aluminum usage increases in those spaces. So I think for Hindalco, I would recommend to hold on for a target of somewhere around 500. And for TCS, it would be better to switch to Infosys.
All right, Hindalco, you should hold on with a target of 500. And on the tech space, you think that maybe Infi is better placed than TCS and has more of an upside. Kush, let me come to you on these as well, because take us through how it's looking from a technical perspective. Hindalco is a stock which is down 20% in 6 months. I mean, the entire metals pack actually has suffered decent losses. And on TCS as well, do you also think that there are other names within the IT pack that you prefer?
I'm going to sound exactly similar to Sharad here, because
that's a good thing. good for our viewer.
And not only in terms of my view on the IT, in terms of the stock preference also, while TCS is also very well placed, if I were given a choice, I would probably pick Infosys over TCS. Yeah. So there, I will just rest the case, there with what, Sharad has said, exactly similar views. As far as Hindalco goes, the only issue is the metal pack that has been under pressure. Now, if the worst is over, which it doesn't seem to be, but if the worst is over, then all of these can see a very sharp bounce. However, the way things are placed right now, I see Hindalco at best coming to about 450 levels, which is still significantly below the buying price. So I would say, hold on with a stop loss, with a mandatory stop loss, and look for, exit close to 440, 450 levels. That kind of bounce is something that the stock can, witness in the coming days.
All right, got it. So that is the complete view on both of these stocks. I'm going to try to squeeze in a few more queries. Sitesh Gidwani writes to us from Surat, Ahmedabad. He holds 300 shares of Rain Industries, which he bought at 110 rupees a share. And he also has 500 shares of Lupin, which he bought at 900. So I'm interested to see what the guests have to say about this, because Lupin, as we all know, I mean, across the pharma board, you've seen losses come through, but Lupin is down around 28% this year. Kush, how would you look at this one? Do you think it's better to trim your losses in Lupin?
It's a very interesting stock, because it's coming back of a very strong, very sharp, downturn, and it's been a wealth destroyer, if I can use that word, right? But now there has been a lot of interest that's coming into the stock, and from around 600, the stock has seen a bit of a revival. Now, just as a dark horse, you could stay invested, in Lupin. Although, if given a preference, my first pick would be something like a Cipla or Sun Pharma or even a Dr. Reddy's for that matter. But as a dark horse, Lupin is actually showing, significant strength. It's not corrected significantly after moving up from those 600 levels. So I would say, because, he's taken that bet of, investing in Lupin, taking that, punt, if I can call it, then, hold on to this. What I could do is, suggest some levels, which is, about 640, which is a very strong support zone. With this kind of a number, with this stop loss, hold on to this stock. The stock will attempt, to move higher. The wait could be longer, but then the stock could see, the 900 levels at which he's bought. Rain, the stock did fabulously well. But again, it's been in a correction mode for a very long time, and every rise is getting sold into. Since he is sitting on a very smart profit here, I would suggest book profits at this level in Rain.
All right, that is on Rain and Lupin. Sharad, let me come across to you as well. Do you agree with Kush over there? Do you think that Lupin might prove to be a dark horse?
Yeah, I think at current valuations, there is more scope of Lupin proving to be a dark horse, because most of the negatives, because of the Somerset's plants underutilization, or the Nagpur plants underutilization, are already priced in. We think that the company is looking at a very smart space over the next 2 to 3 quarters. Gradually, I think a lot of improvement should be visible, and there is huge scope of re-rating. They are targeting products which have a market opportunity of $70 billion US, of which complex categories is roughly 85%. So this should be higher margin or margin products as well, leading to overall higher EBITDA margins and return ratios. The company is also focusing on an injectables portfolio, so that should also do very well. And the inhalation product in the US markets is also one focus area. So I think we are expecting the earnings to grow at a very healthy rate over the next 2 years. 1 year, FY23, may be a bit flattish, but beyond that, we think an earning of somewhere around 40 rupees is possible. So when this ramp up starts being visible, I think it is very easily possible that the stock starts trading at 20-25x. So I think I'd recommend to hold with a target of around 900 on Lupin. And on Rain, I've always been bullish on Rain. The only negative factor is that they usually get into too much leverage. I have usually recommended it as a multi-bagger stock. Currently also, if you look at it, it is the world's largest producer of coal tar pitch and the second largest manufacturer of CPC in the world. The 9,000 crore debt is an overhang. A lot of cross-currency headwinds can impact numbers on a quarterly basis. But at 5 times TTM earnings, I don't think much of risk remains on the balance sheet. So I think I will continue to hold Rain Industries as a good long-term multi-bagger kind of story.
Okay, continue to hold both Rain as well as Lupin for now. Gentlemen, thank you very much for joining us, both Kush as well as Sharad. We're out of time on the show, but thank you for taking our viewers through all of these queries that they had and taking us through a complete technical as well as fundamental analysis. With that, we're out of time on the show. The market, like I told you, is trimming its losses. So the Nifty is just around 30 points in the red, and the Nifty Bank is well in the green right now. So thanks a lot for tuning in. We're going to wind down, but remember, you can email us all of your queries, and we will address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade.